What's up, everybody? It is Monday, February 8th. Got my cowboy hat on. It's been a couple of days since I've been wearing this thing. I thought I'd put it back on today. It looks good, right? All right, let's get into it, folks. Today, stock market averages make new highs. Not surprising, given the fiscal support, and that's just going to continue to grow. Last week, the Senate moved closer to pushing through that Biden $1.9 trillion plan. And even if it does not go through in the full amount, even if it's half that amount, even if it's a third of that amount, that's just going to add to historic levels of fiscal right now. So all these trends, and I'm going to talk about it. So you remember last week, 2 weeks ago, the story was the Reddit meme stocks, right? Like GameStop and AMC and Best Buy and Nokia, and that was going crazy, and the market was, disrupted because of that. And I said, you got to buy that dip. The disruption is going to end. It's going to be very short term, and of course, that's what happened. And now everything is kind of moving to the cryptos. And today, Bitcoin, almost 45,000. Okay, it shot up. That other thing, Dogecoin, whatever it's called, Dogecoin, shot up to a new high, almost a 10 billion market cap. And that thing started out as a joke. It started out as a ruse. But Snoop Dogg attached his name to that thing, or he sent out a tweet having to do with Dogecoin, and that thing shot up. But anyway, let's talk about Bitcoin for a second. Tesla reported that it invested $1.5 billion, or it bought $1.5 billion worth of Bitcoin. So once the Tesla story got out, you could imagine with the kind of sway that Elon Musk has, that thing shot way up. Now, all of this, let me just say, all of this is a sidebar to the bigger picture, which is this historic amount of, fiscal support that we're seeing. And it's ongoing. It's going to get bigger. I said there's not a chance at all in the first year of the Biden presidency that this is going to slow down. So the markets rise, the rise in cryptos, and by the way, a couple of weeks ago, I said Bitcoin is going to hit a new high. Which brings me to a video I also made a couple of weeks ago. You can go back and search for it on my channel, where I said the reflation trade is over, not. And the topic in that video, the conversation was about Wall Street a couple weeks ago saying, oh, that's it. The reflation trade is over because, Wall Street, just like so many of you investors, so many individual investors, lacks patience, wants everything right now. If the markets don't move every single day in the direction that they believe it should be moving, then suddenly that trend is over. Well, that's not how it works. And when I did that video a couple of weeks ago, I said, fade that view, go against that view. The reflation trade is not over. It was never over. It is still on. They don't understand. You know what's incredible? Even to this point, when I look at commentary, when I look at the news, when I look at the so-called explanations or rationale that people put out there for why the market is going up, you hear bubble, you hear all kinds of stuff. You hear the Fed, right? Low interest rates, central bank accommodation. You hear nothing still about the fiscal pump that is occurring right now. And if you hear anything about that, it's usually along the lines of the deficit is so big. Oh my God, what are we going to do about the deficit? So whatever discussion of the fiscal that there is out there, it is usually framed in a very negative way. And as long as I see that, as long as people, well, two things. One, as long as people don't understand that, that is a source of kind of like bearish sentiment. That's a source of negative sentiment. They look at the fiscal and they look at that as a dangerous thing. But the bigger point is that as long as that fiscal pump keeps going, everything's just going to keep inflating as it is. Stocks, risk assets. Let's look at gold. Gold last week, we dropped down below 1800. I sent out an email to my subscribers, add to gold positions down below that level. Add to gold positions. Now we're back at what, 1835, 1840, probably on the way up, higher than that. Silver, same thing. Although I focus more on gold. I like to be in a commodity where there's not so much of that small investor or unsavvy investor speculation. Gold is more of an industrial metal, so is silver actually, but gold's a bigger market, less easy to manipulate. I like to stick with that. All this again is based on the macro, the fiscal. None of that is going to change. When you think about it, this is a really, really easy environment to make money in because it's basically the monetary authorities, the fiscal authorities writing you checks, and they're doing that in a number of ways. I mean, they're literally sending checks out to people, but also as an investor, metaphorically, they're writing you checks because they're lifting up the price of all these assets. So you got to buy every dip. As far as the dollar, we saw a pause today in the dollar rally. I suspect that these dollar bulls are going to try to push it up a little bit more. But once again, the underlying fundamentals of the dollar, those fundamentals are bearish. The dollar is in a bear trend. It's going to stay that way until the main things, which are the fiscal deficits and the trade deficits, go away. And, we don't even know if that's going to happen. So you don't fight it. You go with it. And so that's it. Today I sent out the new edition of MMT Trader. If you want to copy that, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. See everybody tomorrow. Bye.